Our next speaker is Paul Bennett, Managing Director of Medallion Metals. Paul is an experienced mining executive and qualified mining engineer, bringing over 30 years of expertise in the operation, development and financing of resources projects. He has held technical, operational and business development roles with companies including Newcrest, Western Metals and Panoramic. Paul spent 9 years as a senior executive with the Resources Investment Banking Division of Rand Merchant Bank. He currently serves as MD of Medallion, a position which he has held for 9 years since the acquisition of the Ravensthorpe Gold Project in 2016. Over to you.
Thanks, Courtney. Thanks also to the organisers and the sponsors of Diggers for putting on another outstanding forum and giving Medallion this opportunity to present. And everyone here today, thanks for your time. It is appreciated. Medallion's a simple, somewhat unique opportunity in the pre-development gold space. It's an opportunity to unlock a significant amount of value in the short term, and then that's coupled with a broader strategic potential, which we're really only beginning to understand the magnitude of. I'll take you through our plans to unlock that value, to realise that potential, and then really place our shareholders in the best possible position to benefit from us successfully executing that plan. So here is the strategy, here is the plan in a single slide, the metrics. Management's identified an opportunity and is executing on that opportunity to bring together the Ravensthorpe resources with the established infrastructure at the former Forrestania nickel operation, and thereby create a new gold and copper producer in Western Australia. And we think that that transition to production can happen rapidly and at minimal cost. Now, the asset combination itself is significantly advanced. We're on granted mining leases. We're clear from a heritage perspective. We've advanced the permits substantially. And of course, we are leveraging off a lot of established kit, particularly at the Forrestania end. The capital's modest. It's efficient to get us to that 70,000 ounce per annum run rate. The margins are high. The project will generate superior risk-adjusted returns, a rapid payback. And then when you get that base case business model up and running, it creates a potent platform for growth. So we establish gold production capability, gold processing capability at Forrestania. A range of growth opportunities then open up for the business beyond there. So just touching on corporate market cap, $140 million. We've got cash of $29 million at the bank following the settlement of the placement 2 weeks ago. We're more than well funded to get to final investment decision at the end of the year, and then that cash reserve will contribute meaningfully to the project development into 2026. In terms of leadership, those names will be well known to people who know the sector in WA, particularly the junior end. It's a small board, it's a small senior management team, but that skill set is really well suited to where our business finds itself at present. And we'll look to augment that skill set as we move towards the end of the year. We've picked up some analyst coverage in recent months. Pleasingly, all of those target prices some way north of where we're trading at the moment. And then it's also worth noting how that register's evolved over the last 6 to 12 months. There's a corporate presence there with ASX-listed gold producer Alkane. And we've also built a significant high-quality institutional representation there. We haven't had that professional representation, that endorsement in the past. It's been a really positive, strong signal to send to the market that those professional investors know what they're doing. They clearly endorse the strategy, the team and the assets, and it'll be fascinating to see how that register continues to evolve over the rest of the year. Just a brief comment on the market backdrop too, because equity market sentiment's so important to businesses that are at the stage that we're at. Now, for the first time in a long time, positive sentiment, attention, capital is starting to return to the pre-development gold space, particularly in WA. This definitely wasn't the case 2 years ago when we were presenting at this conference. Our advisors at the time were telling us, whatever you do, don't mention development, don't mention pre-production capital. But if you look at this peer group, you can see that as they're closing in on commercial production, or if they've even made a commitment to head in that direction, the market's beginning to reward them. It's rewarding proximity to cash flow, it's rewarding likelihood of cash flow, and I think this process is just getting underway. And then if you look at the market cap of Medallion relative to the peer group, relative to the resources that underpin the business model that's underpinning it, notwithstanding we've had a ripping run over the last 6 months, that valuation still doesn't look onerous, it doesn't look demanding. So the sulphide production strategy. This is the strategy shift that's had such a dramatic impact on our business, our valuation, and our ability to access capital. And at its core, it's all about reducing time and money to get to first production, and we do that through two principal mechanisms. First is that we leverage that infrastructure at Forrestania. Now, at Forrestania at the moment, there is a fully established sulphide flotation plant. It's remarkably well suited to treating our ore at Ravensthorpe. It's on grid power. There's a tailings storage dam there, fully permitted, has capacity, can be expanded. Remarkable support infrastructure, and then mining infrastructure that we can transplant to the Ravensthorpe end. And all of this is a tremendous tailwind for us to get into production quickly and at minimal cost. Now, the other lever that we pull is that we focus exclusively on the sulphide subset of the resource at Ravensthorpe. This is the best understood, the highest value subset of the mineral resource. And by doing that, by focusing on mining that material from underground only, what we do is reduce the disturbance footprint dramatically. We go from 250 hectares of native veg clearing under the standalone scenario down to 70 to 80 hectares under the underground plan. In addition to that, the impact of that disturbance is greatly reduced. We're not doing large open pits, large waste dumps, process plants and tailings storage facilities. And the net result of all of that is that we've got a streamlined pathway through the regulatory framework relative to what we might have expected going down the standalone pathway. So the more we look at this strategy, the more sense it makes. Again, it's all about compressing time and capital to get to first production. The more sense it makes, the more synergy we see, the more opportunity that we see. In December of last year, we released a scoping study. It was looking at the technical and the commercial merits of the sulphide production strategy. And this slide focuses on the physical, the production elements of that study outcome. On the left-hand side, you can see the layout of the Ravensthorpe mine. And then on the right-hand side, that ortho photo is the Forrestania process plant as it stands today. And then the red annotations are the changes that we're proposing to make. So production inventory, 2.7 million tonnes, 3.9 grams gold, 0.6 copper, 500,000 tonne per annum throughput rate, yields a mine life 5.5 years. And then the project generates high metallurgical recoveries to two products, the copper concentrate with a precious metal credit, and then we leach the float tail out the back end to make gold and silver doré. Now, this is a direct analogy for Volt's deflector project, specifically as it relates to mineralogy, process route, and then more generally scale. And if you put those metrics together, it yields a 70,000 ounce per annum run rate on a gold equivalent basis over that mine life. So if we take that base case scenario, drape over it some conservative cost assumptions, some conservative macro assumptions, it yields these outcomes. Pre-production capital, $73 million. That's split down the middle between building the mine at Ravensthorpe and then undertaking the modifications to the plant at the Forrestania end. That's, again, it's efficient to get us to that 70,000 ounce per annum run rate. The project generates high margins, all-in sustaining costs $1,845 an ounce. That's Aussie. It's net the byproduct credit. It produces almost $500 million of pre-tax cash flow under those base case assumptions. So impressive returns on investment, rapid payback, and then of course if you run a spot scenario, all of those outcomes are enhanced dramatically. And that's not unique to our project. The other thing that this project is levered to is expansions in the production profile. So extensions to the mine life or increases in the rate of annualised metal production. And we're working on two principal initiatives there to manifest that when we get gold production capability up and running at Forrestania. And the first, most advanced, most tangible of these is at the Ravensthorpe Gold Project. Now, we couldn't have taken advantage of the Forrestania opportunity in the absence of this base foundational asset of the business, the mineral resource at Ravensthorpe. We've drilled 60 kilometres here since we listed in 2021 to grow the resource to where it stands at today, 1.3 million ounces of gold, 56,000 tonnes of copper metal on a global basis. There's another 17 kilometres of drilling coming in behind that, which is principally targeting the sulphide subset to grow that number in terms of its size and its confidence. Now, the deposit is a significant mineral system that we're just scratching the surface of. Average depth of drilling 100 metres, mineral resources estimated to 330 metres, deepest ore grade bedrock hit we've got into the system 400 metres below surface. These lodes are open at depth. In some cases they're open along strike, in some cases they're projected to intersect with one another. Now we think with the ongoing drilling and ongoing investment, the mine life will extend here through extensions to those known lodes. The other thing that we've been successful with over this most recent drill program, and as a result of some great work by a geological team on site, is that we've uncovered new lodes at depth within this system. So in particular at the footwall of Gem and the footwall of Harbour View, impressive grades over mineable widths. And if these lodes develop, they can have the potential to add to the mine life, in addition to perhaps increasing the production rate if we establish new production horizons there. So this deposit's got a lot more to give up. We'll be remobilising drills here in the spring. That drill program will have both extensional and infill components to it. There's a real case building here to do some deep drilling right along the strike length of the system down to 500 metres below surface. The other initiative that we're working on is earlier stage but potentially just as high impact, and that relates to Forrestania. Now, the transaction with IGO has gone binding. We announced that this morning. And when the deal closes, Medallion will acquire the Forrestania nickel operation tenure, and then we'll grant back to IGO the lithium and the nickel rights. Now, the FNO tenure extends for 900 square kilometres. It straddles the Forrestania greenstone belt. This is an historical fertile gold field that's been locked in a nickel business for a generation. It threw up Bounty. It produced 1.3 million ounces at 5 grams. It's one of those, Bounty's not actually part of the tenement package, but we control the geology to the north and the south. Now, this is one of those rare opportunities to acquire an underexplored greenstone belt in Western Australia, specifically as it relates to gold. This is a huge data set here, huge opportunity. Tenements stretch for 160 kilometres north to south. They contain 33 registered gold prospects, 3 historical resources, a vast data set, 50,000 drill holes, significant geochemical, geophysical data sets. There's multiple walk-up drill targets here, areas that we'd follow up based on the anomalism we can see in the data. Now, an opportunity like this takes time, balance sheet, requisite technical capability to make the most of, to systematically work through and flesh out. But when you've got a mine life of 5 to 6 years at Ravensthorpe, which we fully expect to extend, then that gives us the runway to take advantage of this as well. And in addition to this, once you get that gold processing capability established at Forrestania, then it brings into play the third-party deposits as well. So we see multiple opportunities here to return Forrestania to being a significant gold production centre in Western Australia over the short to medium term. So where to from here? 2 principal work streams underway in the business at the moment, one at the corporate level, one at the project level. Now, at the corporate level, the transaction's now binding, and so our focus turns to getting the conditions precedent satisfied to transaction close. Now, IGO are working with us through this process. They want to see us as de-risked as possible when the time comes to close the transaction, and then the assets and the tenements come across, because with them come some significant obligations. And Medallion needs to be prepared, needs to be match fit to take those on and manage them responsibly, which we will. So by de-risked, I mean feasibility study complete, funding arranged, not necessarily drawn, but available to be drawn when we conclude the transaction, and then the Medallion board making that positive decision to go ahead with the development 2026. So everything that IGO wants to see aligns with what the Medallion board needs to see to go ahead with the development. And that means that everything we're doing at the project is also geared towards that outcome. There'll be a mineral resource estimate imminent. We'll release the metallurgical results of the test work and the metallurgical assumptions that will underpin the feasibility study before the end of the month. The study's advanced. Process engineering, mine planning, well advanced. We're seeing physicals, we're seeing costs. We like what we see. We're running hard on the permitting. All of the additional information under the federal system has been submitted. Our minor amendment under our existing state approval has been submitted, and the Mining Act approvals will come in due course. I should also mention the discussions we're having in relation to finance and offtake. There has been a huge amount of interest in the copper concentrate, the copper product that the project will produce. It produces a high-value, clean concentrate. We've had 14 proposals lobbed, 7 of which have got attaching funding solutions for up to $50 million. And if we can progress one of those indicative offers through to a credit-approved offer of finance, then that puts in place that foundation piece of capital around which you can build the mine. So a lot of de-risking milestones to flow through to the end of the year, in addition to us re-firing up the drills again at Ravensthorpe. So to summarise and wrap this up, we think it's a compelling opportunity for investors who are seeking exposure to advanced gold and copper production opportunities with assets here in Western Australia. This is a sector of the market that's got attention and capital flowing back to it for the first time in a long time. The business is well run, it's attractively priced relative to its peers. We're crafting a clear, concise pathway to being a 70,000 ounce per annum producer in short order and at minimal cost, and that's just the first step. We're laser focused on progressing through those de-risking pathways to get to final investment decision and on into production in 2026. And we think as we make that progression, the value of the company begins to reflect the underlying value of the assets and the growth opportunities that extend beyond there. So 2025 and 2026 will be packed with positive news flow. The timing couldn't be better. $8 gold price north of $5,000. M&A starting to heat up in the sector. If you haven't done so already, I'd encourage you to take a closer look at Medallion. Contact us through any of the channels. We're always happy to talk about what's unfolding at Ravensthorpe and now Forrestania. Thanks for your time. Thanks, Courtney.
Please put your hands together for Paul.